21 minutes after 7 o'clock this Wednesday. Let's talk business, let's talk money, let's talk about those who aren't managing their money as well as they're hoping to, but because of extenuating circumstances like the cost of living, the unemployment rate, blackouts, the price of fuel, the price of food. I can keep going on and on and on. Now, aren't many people not able to get through the month with what they're earning each month as well? It's been a very worrying trend. Let's bring into the discussion head of DebtBusters, Benay Sager, joining us this morning. Benay, hello to you. And it's all got to do with unsecured loans. We'll talk about what DebtBusters does and how you can help someone in a real jam. But it's very serious. We don't want to get people blacklisted and bankrupt. We don't want to get there. But first of all, just talk to me about how bad it is at the moment. How many people are looking for debt relief assistance? Good morning.
Good morning, Gareth. Thanks for having me on the show. I think what you say about the South African consumer is true, and I think the consumers are feeling the pinch based on three primary factors. The first one is that salaries haven't really grown over the last several years. They've been more or less flat, and against inflation, that actually takes us backwards. The second thing is the interest rate rises that happened so quickly, and so steeply that we've actually were caught completely unprepared as a country, I must say. And this is a global phenomenon. And the third thing is inflation, I think made worse probably by load shedding. And we haven't point out that we haven't even yet seen the full effects of that, in terms of food and stuff. But electricity and petrol have been almost double the price that they were about 6-7 years ago. And I think our consumers were caught completely unprepared when you have all three of the things coming into. Now, your question on how many people are seeking help, what we've seen is that with the debt index, we look at the number of consumers who apply for debt counseling at DebtBusters, and we compare it to the same period the previous year. And we've seen 40% increase in terms of the number of people making inquiries about the solution. I think we always state that the solution is not necessarily for everyone. I'm talking about specifically for debt counseling, but it is. I think it's also a sign that many more consumers are actually taking the responsibility of wanting to pay back their debt seriously and seeking out help, recognizing that they need someone else to help them.
Ben, let's talk, if we could, while you're bringing in some very important numbers. Is it true that up to 65% of some South African salaries, 65% of their net income, so that's after tax, is going to paying off debt? I mean, we're not even getting into the realms of talking about savings and investment. More than half the salary is going to pay off debt, isn't it?
Yeah, it is true. This is, again, based on the consumers who applied for debt counseling with us. And we look at how much of their income they spend on various things. Debt expenditure is, of course, one thing, but we also look at more holistically every single item. And it's quite a comprehensive assessment. And out of this, we look at the different income levels and what people are having to spend if they were to pay back the debt every month in full. And the 65% number is true, as you said. It's basically 2/3 of their take-home pay. And I think the reality is that when we normally work with individuals and give them advice in terms of how to manage their debt, we always say, if you're spending more than 30% of your take-home pay in terms of debt repayments, you're in a bit of danger zone. If it's more than 40%, then that's not sustainable. And here we are looking at a group of consumers where they're having to spend 65%, and that certainly cannot be sustainable in the long term. So I think this is the challenge that many South Africans are also facing. Almost 2/3 of net income having to go to expenditures that are quite large.
They really are, and they're going to get only worse as well, I'm afraid. So let's try and cut this off at the head if we can. How does something like DebtBusters help someone try and manage that? Because somebody could be watching this at home going, well, Gareth, Benay, I've only got so much money per month. I've still got to pay this debt. How is something like DebtBusters actually going to make this any better? Because while we talk about that, Benay, let's also just, if you don't mind, alluding to the fact that if you don't handle your debt, eventually someone's going to come knocking. You're going to end up being bankrupt or even worse, blacklisted. And if you think it's bad being in debt now, wait until you're blacklisted, isn't it?
I think that is true. I think the most important thing I want to leave the listeners with is that they must deal with paying back the money that they borrowed. At the end of the day, if you borrow a certain amount of money, you're liable for paying it back. And I think we have to be very clear that whatever solution you go with, you're going to be liable for paying back the money that you borrowed eventually. Now, how debt counseling solution works, and again, one needs to see for consumers whether they would be candidates for it. It's basically created as a creature of the National Credit Act. And the idea there is that the people who wrote the act foresaw that at some point, some of us will get into debt trouble, which is kind of what we're talking about now. And they wanted to have a legal facilitated way where they bring everyone around the table, including creditors, the eNCA, and so on, to actually restructure the debt repayments in such a way that are affordable for the consumer and giving the consumer longer time to repay back the same amount of debt. And I think that's the key point. You just have longer time period to pay back your debt with a solution like debt counseling. But what they also foresaw was if you are going to go down this route, you need to have a source of income. You need to demonstrate that you can pay it back. And you need to prove that your expenses and your debt repayments are more than, when the two are combined, are more than what you're taking home. Now, it's not a solution for people living in luxury, and I think many of our consumers these days are not even living in luxury, but it is a solution for consumers who are over indebted. And the way that it works is, like we said, we stretch the time that the consumer has, let's say if they had 2 years to pay back a personal loan, we'll try to work with the creditors to make that, for example, 3 years or 4 years, giving the consumer breathing room, and in most cases being able to tackle high interest rates as well. On average, the consumers coming to us are coming these days with about 24% per annum interest rates when it comes to unsecured lending, particularly personal loans. Gareth, I think we can agree that's probably not a sustainable place either. So I think if consumers are finding themselves in a bit of a pickle, so to speak, I think the best thing to do is ask for an assessment. Assessments are free from debt counselors. It's generally done telephonically, so it's not very intrusive. Ask for an assessment, understand what your financial situation is, and then you can make the right decision for yourself from there onwards.
And just very briefly, Benay, as I say goodbye to you as well, because eventually those creditors are going to come back. They aren't going to vanish. You can't put your head in the sand like an ostrich and pretend it's going to go away. In fact, the longer you leave it, the worse it's going to get. Very briefly, let's imagine someone's gone through something like DebtBusters. They've gone through the counseling. Is this forever? Or how long does it normally take? And what happens after, I suppose, you're declared non-bankrupt? You're not in debt review anymore. What's the process there? How does it actually formally end? Just very briefly.
Yeah, so it formally ends when you pay up all your unsecured debt, meaning your personal loans and so on, and your vehicle. For bonds, those are treated differently because they have a long runway. When you have paid up all your unsecured debt and your vehicles, if you have a finance vehicle, then you get what's known as a clearance certificate, and you carry on paying if you have a bond subsequently to that directly to the creditor. But that clearance actually clears your name also from the credit bureaus or ever having been under debt counseling, because one of the regulations from 2015 is also to make sure that consumers don't get prejudiced against by taking this responsible solution. So it's generally somewhere between 3 to 5 years, as we said, but then you get your clearance, and most of our consumers are able to borrow again very quickly after that.
Oh, hopefully they do it responsibly this time round, though, once they get out of debt review or debt counselling. I suppose that's the point, isn't it? Benay, I'm sure we'll talk again. Thank you very much indeed for your time. Benay Sager, the head of DebtBusters. It's such an important discussion to have, especially with the cost of living going up. If you are one of those families, one of those people, one of those caregivers that are finding yourself drowning in debt, please do not wait until the blacklisters start coming up after you. There are other solutions, like the head of DebtBusters was saying. There are solutions, but don't wait too long.